Thank you for joining us for our Christmas and Gifting Inheritance Tax Planning webinar. Just a bit about us to start with. I'm Robin Hack. I'm a Senior Chartered Legal Executive in the Private Wealth and Inheritance team. I'm joined by my colleague Bridget Bailey. She's a trainee solicitor, but she's due to qualify as a Private Wealth and Inheritance solicitor in February. You'll hear from both of us throughout. It is a whistle-stop tour, so if you do have detailed questions, please do take down either our email addresses and telephone numbers, and we'll be very happy to answer any questions afterwards. With Christmas coming up, it's important to know how much you can give without potentially attracting inheritance tax liability. To be able to talk about this, Bridget is going to go through a few of the basics about inheritance tax, and then we can have a chat about gifting.
So going back to basics, inheritance tax is a form of tax that appears on death, but gifts made in your lifetime can impact possibly the amount due. So within the process following a death, the executors of an estate need to sign a declaration to go to HMRC to basically say that they have reviewed the gifting position 7 years prior to death. They then have to report all of the chargeable gifts to HMRC and then sign this declaration to say that they have done this. If the executors provide false information, it's quite serious, but it can be a contempt of court offence. So this is a fairly serious and high reporting obligation. So that key date there for gifting is that 7-year mark prior to the date of death. So in terms of for inheritance tax purposes, everyone has a tax-free allowance known as the nil rate band. This value is £325,000. So on death, anything over that nil rate band value, also including other tax-free exemptions and allowances, is taxed at 40%. So obviously there are other reliefs that could be included depending on the specific estate, such as residence nil rate bands, transferable, obviously to do with spouse and charity exemptions. But we're not going to go into that today because this is more of an overview. So any gifts basically that you make in your lifetime can impact that nil rate band of £325,000, and we're going to be talking about those gifts here.
So there's two main questions. The first one, what is a gift? HMRC class a gift as anything that has any value. So this is cash, a house, shares, or possessions such as a ring. The second question is what gifts can be made tax-free? So these are the gifts that you can give away without any worry about there having any impact to inheritance tax. So the first one, which is the easy one to remember, is that all gifts between spouses or civil partners are totally tax-free. So at Christmas, you can give your spouse or civil partner as much as you want to. Also, if you want to give more charitable gifts at Christmas, that's fine because you have a charity exemption too. So upping your charity gifts at Christmas is absolutely fine. The main exemption also that everyone knows about is the 7-year rule, which Bridget mentioned earlier. So if you make a gift and survive 7 years, it's taken completely out of account for inheritance tax purposes. So when your executors are reviewing your gift position over the last 7 years of your life, they can completely ignore any gifts made before 7 years. If you don't survive 7 years, then the value of those gifts start reducing your nil rate band of £325,000. So, for example, if I made a gift of £25,000 at Christmas to my daughter, I died 2 years after making that, my nil rate band is reduced from £325,000 to £300,000. So it's essentially reducing your nil rate band allowance, your tax-free allowance on your death. Where you need to be careful is if you make more than £325,000 worth of gifts in those last 7 years of your life, then all of your nil rate band is used up. So your executors don't have that tax-free allowance to use against your estate, likely meaning there could be more inheritance tax due. If you make gifts over £325,000, that's where you need to be extra careful because you're essentially making a tax liability for the recipient of those gifts. So you make gifts of £350,000. The person that's received those gifts over the nil rate band has a tax liability to pay. Tax liability is normally 40%, but if you've survived a certain amount of time after making that gift, the tax rate of 40% can be reduced from anything between 36% and 8%. It depends how long you've survived. So the moral of the story with the 7-year rule is if you want to make gifts at Christmas or throughout your life, you should start earlier than later.
So, in terms of an exemption, everyone has an annual exemption of £3,000. So that means that every Christmas or events through the year, you can give away £3,000 per year, completely tax-free. You can give this £3,000 to one person, or you can split it between several people. So that's not £3,000 per person, just a £3,000 total, split between whom you like. And also, if you haven't used that £3,000 annual exemption in 1 year, you can use it in the following year. So you can bring it forward to the next tax year, but you can only do that once.
So as we're talking about Christmas, we should say that technically speaking, Christmas gifts are exempt from inheritance tax. However, HMRC don't allow you to give Christmas gifts willy-nilly. You must be able to make those Christmas gifts from your regular income. So this means you can't withdraw £10,000, £15,000 from your investments or your savings and class it as an exempt Christmas gift. HMRC are not going to allow that. It's more about gifting usual Christmas gifts so that you're conscious of the amount you're giving is reasonable on the face of it and that you're giving it from the income that you receive.
There is also a small gift exemption, which means that during the year you can give as many gifts as you like, up to £250 per person you want. So this is each tax year, as many £250 as you want. But the key point with this rule is that you can only use this if you've not used another allowance that we've mentioned on the same person. So for instance, you couldn't give £250 to your grandchild at Easter, but then at Christmas give them £100 as a gift. That would mean that this £250 small gift allowance would no longer be available.
So a more complex exemption that a lot of people don't know about is that you can give your surplus income away tax-free. So at Christmas, you can think I can give a lump sum of my surplus income to my kids. What does that mean? It means that when you've calculated all your income for the year or every month, if you're working on a monthly basis, and you can pay all of your expenditure from that income and you have something left over, then you can give that surplus income tax-free. There are very complex forms that your executors need to fill out to claim this exemption. It's not automatically available. HMRC have to approve it. So if you think that you're gifting surplus income, then you should start getting A, tax advice, or B, you should start making a schedule to set out your income expenditure and your surplus income. It makes life much easier for your executors to claim that exemption from HMRC. Our advice, if you are regularly gifting a lot of money, is that you keep a record of all gifts. It is much better than your executors having to go through 7 years of bank statements to try and work out what's happened and trying to work out what's income and expenditure and not being able to apply all the available exemptions that they can. So even at Christmas, if you think you're keeping in line with your exemptions, there are other things to think of that might tip you over.
So going to go through a few things that an individual may think is a gift, and it turns out that it actually may have an inheritance tax liability attached to it. So there is something called a gift with a reservation of benefit. So let me just go into that a bit further. So cash gifts are easier to manage, but if you're feeling super generous and you're thinking about gifting your home to your children, to try and reduce that inheritance tax liability, remember we do not recommend that to start with, but remember that you cannot remain living there. So HMRC does not class this as a gift, and they will bring the value of your house back into account for inheritance tax purposes. That is because you are remaining to benefit from that property while gifting it to somebody else. You could remain in the property and pay market rent, but you would then have to have the income in order to do that. Also, if you are giving your child a rental property, that rent must then be paid to them and not to you. Another point is that people sort of like trying to use trusts in order to manage an inheritance tax liability. However, remember that also making gifts into trust can trigger instant inheritance tax liabilities. A trust is not always a tax efficient way of managing your affairs. A trust can also have inheritance tax charges every 10 years and when assets are withdrawn from the trust. Additionally, when gifting property, there is also other tax liabilities to be conscious of. You could be triggering capital gains tax. For example, if you are gifting a second home or a rental property to your children, that can be classed as disposal for capital gains tax, and you'll need to pay capital gains tax on the gain between the time that you acquired it and at its value today.
So essentially, there's lots to think about. And if you are gifting major assets or lots of money, it's best to get tax advice from a financial advisor to make sure you can afford it for the rest of your life, and to afford care fees, etc., if that might be relevant. So Christmas gifting is important, but make sure you're thinking about the whole tax year and what else you've done in that tax year that might tip you over the available exemptions. Of course, the elephant in the room today is, of course, the budget. So what we've spoken about today could, unfortunately, it could completely change. We don't know what they're going to say, and it may be that we have to rethink about all of everyone's gifting and inheritance tax plans again after the 30th of October. So just a few things that they could change, and that the public, what's in the news, they could change the value of the nil rate band of £325,000. They could reduce it. They could completely take away your residence nil rate band. They might even change the rate of inheritance tax. They might put it up from 40% to 45, 50. We're not entirely sure. They might take away all of the gift exemptions that we spoke about, or even they might tighten down on the 7-year rule. It's an unknown world, and if anyone has any major concerns about it after the budget's out, then please do get in contact. They might also change the rate of capital gains tax, so that the rate of capital gains tax is brought in line with income tax, so that higher rate taxpayers are going to be paying 40% on any capital gains. So if you're second homeowners, then you should definitely get tax advice there. There's a lot of speculation. We're not sure what would happen. It may be that they don't change anything, but if you are worried, please do get in contact. The moral of the story here is that just pay attention to your finances, how much you can gift. If you have got an estate that's over £1 million, and you're over your tax-free thresholds, then you should get some tax advice. Look at what you're gifting and look at how much you can afford to give at Christmas. And to that end, I think that's all that we need to cover. And we'll just put our names back up on here, and so you have our details. Please do feel free to email us. We can answer very generic questions. or pick up the phone. So that's us. Thank you very much for joining us. And maybe we'll hear from you after the budget.